Hey traders, this is Christian from Tribeca Trade Group, and this is your weekend video to get you ready for the week. So I'll talk a little bit about last week and the option flow, and I'll talk about some of the option flow to concentrate for this week. But clearly, I could probably spend at least an hour to talk about the option flow that we've seen in the last couple weeks in tech, in semis, in software names. These particular areas have been the outperformers. They really have been leading for the last couple weeks. So I'll go over a little bit of that, but I'm certainly, I don't like to dwell about the last couple weeks. I really want to talk about the focus going for next week. And, I could go ahead and beat my chest all day long about how many names that we called and how many names that I've been in that we caught really nicely from the option activity that has just been, I would say, just incredible in terms of the tech space, the software space, the semi space. But that's not really my style to kind of go over and talk about all my past winners over the last couple weeks. Yes, we caught them all. Congratulations. Great. Now let's prepare for the next week. So the FANG stocks were up 5.8%, and FDN is an ETF that I'm in. I've been in that now since for a couple weeks, so really caught that quite nicely. The semiconductors up 5.1%. The Chinese internet names up 5% last week. But if you get past those top performers and really, again, where we've been seeing the majority of the option flow, there was also some other nice moves in some other groups, which was great. And this was one of the areas, if you watched my previous last weekend's newsletter, there was a lot of boxes that I wanted to see checked in terms of not just tech leading, but some other areas start to catch up a little bit. So financials, XLF was up 4.5%, industrials up 4.4%. Biotech was also a nice performer the last 2 weeks, really. That's both XBI and IBB. So again, some other areas really started to participate last week, which again I think is an excellent sign. Also in the international area, we saw a lot of emerging market areas, a lot of frontier markets. Like look at Egypt, was up 8% last week. Not that I played Egypt, but just a good proxy to kind of see what's going on globally in terms of risk. So again, a lot of areas that were up more than 3% in international as well last week. Okay, so I'm going to get to the option activity. Clearly, you can see from the list that I have, there's just a ton. So let me skip this for now. I want to go over some names, but I want to first talk about the bigger picture, and I want to talk a little bit about strategy. And so let's go ahead and start with the S&P chart. There's a couple takeaways from this. I don't always just super analyze the S&P chart because there's so many other things going on, and I think some people kind of get dwelled down in just the S&P chart. But I think there's some interesting takeaways here. So first of all, we spent some time doing this kind of back and forth motion. Really, you have all green candles for last week. So where are we now, basically? I think this is a good sign that we're above value. This is the value area for March. It's really good that we're now outside of value. So the support, two areas of support that you want to watch for next week. The 50-day moving average, which we're now above, and we just got above. Clearly, we had a huge day on Friday, which was awesome. So we're above the 50-day moving average. Your first level of support is going to be this 27.64. And if you like to use SPY rather than S&P futures, I know a lot of people look at both, but I will give you the top of value. It's going to look obviously very similar. Let me just get over here. And that's 276.06, right? 276.06. That's a really nice level if you're a short-term trader to take a look at. So 276.06, and then the 50-day moving average is your second line in the sand. So if you're maybe an intermediate trader, you want to use that 50-day moving average. On the upside, so again, I will always talk about what to watch on the downside and your risk first. I think that's most important. On the upside, and why I think we could go a little bit further here in the S&P, is because we have not really gotten to the level of resistance, which I think is this point of control for February. So S&P futures, the upside, 28.33 is really the level you want to watch. That's important because a lot of volume happened here, and there's going to be overhead supply. So does it mean that it's game over? No, but we might see a little bit of digestion up there in the S&P. All right, so that's, I think, really interesting levels to watch on the downside. And on the upside, I think that we've got more to go to the upside. We're also not overbought. The RSI is kind of right in the middle. It's actually a little bit more to the upside. It's a 58, but it's certainly not telling us overbought. NASDAQ, right? Now, NASDAQ has been the leader. There was some people, and I talked about this in towards the end of the week in videos. I was not calling for a top in NASDAQ. I saw some people doing that on Twitter. I just thought it was too strong, and you could certainly see. It's funny that some people will get so focused on one particular chart and think like, oh, here's resistance, right? But then they fail to look at some of the other charts. So I mean, FDN again, which is, I call it my FANG proxy. This is the Dow Jones Internet ETF. Just went all the way through. And again, here was my entry on the 50-day moving average. All the way down here. Once we reclaimed, I think my entry was on 212. And I'm going to talk about strategy a little bit, but I just wanted to kind of express this. So that's FDN. And then you could look at the equal weighted tech ETF, through the highs, no problem. And then the other ETF that I talk a lot about is IGV in the tech space. This is the tech and software, which has been just, has had this huge momentum the last couple of weeks. This is one of my favorite ETFs to watch in the tech space because, again, it just captures other areas than just the FANG stocks. The FANG stocks have been great. Have had the momentum. They've been super strong, but it's not just the tech. Again, if you go back to that RYT ETF, which is equally weighted tech, you could see that this has had no problem with breaking out again, and every name in this ETF gets the same exact weight. So your Facebook, your Netflix, your Amazon get the same weight as Adobe and Salesforce and so on and so forth. So again, to me there was no issue with us getting through those 52-week highs once you kind of saw. And again, the Qs are not just tech. There's biotech in there. There's also some consumer discretionary names in there as well. But it just looked like it was this rally that we saw in the higher beta names was just too powerful. What was really interesting last week was small caps. Small caps started to lead in the beginning of the week. We did hit this overhead supply. So this will be interesting this week. I think IWM small caps, again, keep an eye on them because we've hit that level that I just talked about in SPY. And if they want to keep continuing to go higher, that should kind of give us a little bit of a clue about what the S&P is going to do. So if these small caps kind of digest a little bit in the beginning of the week, we might have a little bit of chop going forward. That is not a problem to me. Chop is really not a problem to me. And the topic that, what the first page of my newsletter that I wanted to kind of discuss is, or I put subject of the week or theme of the week is a trade versus investment, right? So a lot of the names that we've seen the big option activity in, your Constellation Brands, your Deere, these are non-tech names, by the way, your Deere, your Wyndham, and then especially in tech, right? Your Micron, of course, right? That's where we saw the first real big option activity when the volatility was really super high, and but your Salesforce, your Alibaba, your Google last week, your NTNX, your Western Digital, your Microsoft, right? So I'm not going to bring up every one of these trades, but for the most part, how I kind of dealt with this volatility is I went further out. I went out to a lot of trades that I put on were out in June. I gave it plenty of time to work. I went out in June, July. I think even the Micron trade that I had on was January, right? Which ended up being a double for January options. But also, not every one of these trades that I participated in were huge size, right? The Western Digital was not a huge trade for me. So I kind of scaled into some of these names. I wanted to make sure that the signals I thought were so good that I wanted to participate, but I did not take just huge outsized trades in everything. I kind of scaled my risk appropriately, especially if trading options at NTNX, the implied volatility is super high. So I'm not going to take the same position size as NTNX as is the Microsoft trade that I have on. So some of these trades that I'm out pretty far in, I've been scaling out of, and I'm not out of completely, but they're more trades. Even though I gave it, I purposely went out farther than I normally do, because the VIX was a much higher than expected level, and I wanted a lot of wiggle room in case we did get some more volatility, that I could go ahead and adjust those positions and manage those properly. So I think that was a really good way to play the last couple weeks. And I'm scaling out of those positions. Again, even though they're further out trades, June, July, and so on and so forth, and some May I have on, they're trades, right? So I can't hold those, or the object is not to hold those all the way to expiration. The object is to, in some of these trades, right? You look at Salesforce. I mean, it's mission accomplished, right? I mean, these names could have more to go, and that's why you leave a runner on. But it's mission accomplished, right? When we started to see this call buying, it was 108. The stock's 127. So you have to take, for me, I have to take profits in some of these names. Like I said, Microsoft, I think, has more to go. It just got out to a 52-week high on Friday. I'm looking for a bigger of a move. So I've been, trying to make sure that I take some money off the table. And lock it up and put that money away, because again, I don't want to just have paper profits. I want to be able to kind of to make sure that I'm accumulating a big cash position in case we do get a little bit more volatility. But Microsoft is one that I've been taking targets in. Micron, I will address Micron. I'm out of 90% of my position. Again, I got into this one down here, at $40. It's up to 54 and it's broken out. Do I want to, continue to kind of let that trade work, especially it's a January trade? Sure. But it could come back in a little bit, regardless of the option activity that we're seeing in this one. So those are trades. But also, some of the names that I've gotten into as investments, which I also manage. I manage two portfolios. I manage an option position, and again, I participate. There's so many people who are tweeting like the same things out over and over, and I doubt these people even have positions on. If I'm going to tweet stuff out, and again, I'm not going to tweet the same thing out over. I'm not going to tweet Microsoft out 10 times because I'm in a position in it. I think that's kind of ridiculous. Focus on some new things, but I'm just not going to tweet about these things over and over and over, which I see some people doing, and I really don't understand that they've still stuck on the same type of thing. But names like FDN, EEM, MCHI, because again, I do manage an option portfolio and I manage a cash trend portfolio. Those names, I'm not going to really take any targets. Those names are investments. And from every trade that I put on as an investment, I'm always looking at the stop price, where the trade is not going to work. And most of what I've added, I think actually everything that I've added here in the last few weeks, has worked quite nicely. FDN, and I'm happy to show you the portfolio. I don't care. I would rather show you the actual trades than show you option activity that worked, but I wasn't in. These are trades that have worked really well. So I started to add these positions on, and granted, everything that I hit a stop in, there were positions that I took stops on, and rightfully so, right? And a lot of those positions, I got out for higher than my entry price. So my job is now, for some of these positions, these cash positions, is not to is not to take them off, but to maybe ratchet up. So for example, if I got in on the 100-day moving average, now I could ratchet that stop price up to the 50-day moving average, now that these are up above the 50-day moving average. That's basically how I handle the positions that are investments. So I want to let these things run. But the options positions, and especially, what I was doing at the end of last week, as I was hitting, as prices were moving up, what I was doing is really taking off any short-term positions that I have off. Again, not to say that we're going to get a pullback or anything like that, but just being smart about realizing that what has happened the last couple weeks in terms of the flows that we've been seeing and money that's gone in. It's time, I think, at this point, if you've got doubles and triples, to be taking some of that money off, right? And again, leaving the runner on. So again, I'm kind of repeating myself a little bit, but I think it's a really important concept to realize what you have in terms of positions. Are they trades or are they investments? And if they're just trades, realizing again, just when you get into the position, where do you think the stock is going to go, and where do you want to be taking that money off the table? These are all things that you should have in your mind once you get into the position to begin with. All right. Okay, so we talked about the S&P chart. Let me just talk about sectors for a minute. Just very quickly, I put this in the newsletter last week. This is what the sector map looked like, and you could see we were kind of running into some trouble with a lot of sectors kind of in the they could kind of go either way camp. Now you could see what we look like now. And rather than just the one sector above the 50-day moving average, now you've also got consumer discretionary, you've got financials, which, if you haven't looked at some of these charts, they're pretty interesting, right? So the regional banks, keep in mind, I focus on not just option activity, I focus on the cash market as well. So mainly in ETFs, because that really tells you where the money is going. So clearly, we've seen just about every tech name see call activity in, but the banks and some of the financials, we really haven't seen that much option activity in. However, there's been a lot of money that's been put to work in ETFs, and I'll show you that. This was, for example, from last week's newsletter. Financials actually saw the most sector inflows than any other sector. Tech was right there, number 2. But financials have actually been seeing a lot of money put to work. And this, by the way, there was an article out, and I'm not trying to prove anybody wrong, but when I see something that goes out inaccurate, I do a lot of this analysis, I will kind of want to speak up. There was an article saying that, wow, there was a tech ETF that caught a bunch of inflows this week, acting like that's the first of the big inflows. Completely incorrect. So this is from the newsletter that I put out on 2/23. Tech has been leading inflows, and again, what I do is I summarize all the tech ETFs, not just one, because there could be a big inflow in one ETF, and there could be a big outflow in another ETF, and for the whole sector can net to zero. Sometimes that's how it is. Sometimes funds will do that. They'll rotate out of one of their ETFs and they'll go into another ETF because they like the constituents of the basket better, or the management fee is cheaper. So, I look at the whole group every week, and then I try to spot really where people are going into different pockets of strength within the sector, right? So this was from 2/23. Notice the week from prior to that, there was one. So going back to the middle of February, there was $1.6 billion going into tech ETFs. The week ending 2/23, $878 million going into tech ETFs. And you could see which ones they've been, right? It's been actually a big group of them, all the way back here, VGT, SMH, the robotics ETFs, the Chinese internet ETFs. Going back to 3/4, you could see tech also was had $500 million of inflows. XLK, VGT, IYK, BOTS, SMH, the semis ETF. So what did we see this week? So this week, and if you go further into my newsletter, and again, I'll get to the aggressive option activity that I want to focus on for the week, but I think it's just a good point to note that actually tech only saw $357 million. Again, still inflows, still pretty good. And if you take a look at what happened, there was some pretty interesting moves within tech. So for the week, it was $357 million of tech inflows. FDN, which is the ETF that I keep talking about, this is pretty crazy. That this actually saw $550 million go into the ETF, and I'll bring this up so that you could see this on Bloomberg, because Bloomberg will allow me to actually see the inflow. But you could see on the highs on Wednesday. I think this was, I'm pretty sure this was, I'm going from memory, but this is the biggest inflow the internet ETF has ever seen. So this was on Wednesday. So this saw a big inflow. XLK saw a big inflow, right, towards the end of the week, which was nice. Now, granted, there was an inflow up here too, and look at what happened thereafter. So they were wrong on that one. But then also VGT saw profit taking. This is another tech ETF, right? This is the Vanguard ETF. Again, and a lot of similar, almost the exact same components in VGT versus XLK. But look at the money that went out. All right, so somebody took profits in this. This was an outflow of $889 million. Also, this inflow going into FDN, it looks like this was partially a rotation. So they partially rotated out of the cloud computing ETF, SKYY, out $250 million out of that. And it looked like, because I matched up the prints the day that this occurred, and you could see that the prints went up right around the same time. So this is SKYY. Where is this? This one right in front of me. So you can see there's money, again, outflow here. All right, so some profit taking. And it looks like they probably missed out on, if they would have stayed in it, they would have been okay. But there was some profit taking that happened last week. Again, they captured, the money that went out went right into FDN. And there was more money that was added into FDN than was pulled out in that cloud computing ETF. All right, so that's kind of what's been happening. And so again, I just want to make sure that you understand you're getting the full picture here. And tech, while it was just on fire with call activity, actually was one of the weakest weeks altogether of inflows. Some of these other areas, which I'm going to get into. Let me go to the option activity first, and then I will talk about some of those sectors that saw the inflows in ETFs. All right, so this should also tell you something, right? This should tell you I actually had to separate the semi group out of the technology group, because this is the most, I would say, last week in terms of the option activity, the most that I would say in tech that I've seen in a long time. Pretty much, and again, I highlighted some names in yellow, which I think could still run further. But I'm just not going to go over all these names that have seen the option activity, because there's just too many. And some days that we saw, and it is tough, right? I mean, if you did not participate in all these names, I don't blame you, because there was one or two days where we saw 6 or 7 different of these names go up all aggressively, right? So clearly there was some trades that went up in bigger size. Your Netflix, your Microsoft has been repeat. Your obviously the Micron was one of the biggest trades and further repeat activity. But but mission accomplished, right? For many of these names, they've broken out and they've rallied tremendously. Google was a name that we saw last week that I think could have a little bit more to go. All right, so clearly there's a ton of names. Let me start going over a couple of the names here that I think may have more to go. Data is one. Data hit a 52-week high on Friday. I'm still holding a little piece of this. I got into this name. Again, not a huge trade for me, but it worked pretty well. And I actually hit a target the same day that I got in it, which is perfect. And now I'm dealing with the profits. I mentioned Microsoft already. I think that could still go up. I added FireEye in cash. So FireEye, you kind of have to scale out here a little bit. You might look at this and you're like, oh, it's already had a big run. But you have to kind of do one of these and just see that it's got this long base. So some of these names that are in this long base and may take a little time, I put them on in cash instead. because it's an $18 stock, and we'll see where it wants to go. If it starts retracing, it could get, retracing this price action, it could get pretty interesting. All right, so I'm in that name. That was one of the last names that I added last week, right? And I think my stop for this one, I'm using the 20-day moving average because again it's extended in the short term. So we'll see what it wants to do. If it doesn't break out, and if it stays in this range, so be it. Then I'll get out for a small loser. So I went over that. I think Alibaba has a couple more dollars to run. I'm still in Alibaba. Hit several targets. I'm looking for this thing to basically get to 194. And that's probably where I'll take another good chunk of that position off, and then maybe I'll have the last piece on for a runner. But you could see 194.22 is where I think it could get to in terms of resistance. BZUN, this is a name that I've been in cash for a long time. Chinese internet name. I took off. Actually, I did not take off. It was not a really big of a position that I've been holding in cash. I've already kind of. What I like to do is take half the position off before earnings if I'm holding in cash. So I did that the last time that they reported, and I never added it back here. What I did was I put on a small option trade last week further out because I just some of these names, like, right, you could look at. We talked about this, I think, in last week's video, but Vive, a good example of some of these cloud names just running just once they break out. So 62.20 was your breakout level. And then what I did was I participated in NTNX, noticing what happened to Vive, and that worked really, really well. I think I'm completely out of this one at this point. I actually did not mean to take it off. Yes, yeah, I'm completely out of this one. I took this one off a little bit early. I think I took it off on Thursday. I wanted to leave a runner on, and by accident, I sold the position. Splunk is another name that I took a small shot at. I'm completely out of Splunk as well. But again, look at these things, right? They moved from 95 to 107. Again, I got what I was looking for out of these names. And again, sometimes if you don't put on a big position, it's tough to really take targets, multiple targets. I like to take in option positions 3 or 4 targets, but this one, I just did not have enough skin in the game in Splunk. I definitely wanted to participate, so a couple other names in the tech space, and then I'll get out of the tech space. QD, we'll see what this one does for earnings. I'm really interested in this one. I took half this position off. I put this position. We saw all kinds of call buying weeks back in QD, and then they've been actually hitting it again and again and again in terms of option activity. But now it's really an earnings trade. So again, I had 350 shares on. I took 175 off on Friday. Nice profits in a couple weeks. I got into this position February 23rd. So that's a name to watch. What else? I feel like I've got some other names on here from the tech space. Yeah, notice I don't even have any of the, at this point, Lam Research, Applied Materials. These names exploded higher last week. Could they go higher? Absolutely. Some of these names have kind of been trapped. We'll just look at a couple charts here in Applied Materials. Intel's been a big winner. I do not have Intel on anymore. I've been in and out of that one, but a bunch of traders in the Tribeca trade room have that trade on. Applied Materials just broke out. Granted, again, it's a big move from the 200-day moving average, 47 to 61. But sometimes once these semi names get going, they could keep going. Notice it's not, as crazy as it sounds, it's not overbought on the RSI either. Lam Research. And guys, these names are tough to trade in options. So if anybody just comes on, or says that, oh my God, they went ahead and they bought so many of these Lam Research calls, it's a $225 stock. So, and in options, it's a very difficult name. It's not an easy name to trade in options. You kind of have to use, what I do is I use call spreads, but I think this Lam Research could have more to go. And you may get a chance if it has maybe an inside day on Monday or Tuesday, but just broke out. This is a name that had great earnings and just kind of fell on its face, which I think everybody kind of wondered what the hell, because it was so volatile after after earnings, but it's finally back to where that was. So if you missed out on this rally, if you missed out on some of the option activity, you may still get a chance. But again, they're not easy names to play, so don't let anybody tell you that these names are like super easy to play swing trading. They're not. The implied volatility and the in particular in Lamb Research, the market makers are very, very wide in these options, right? So it's tough to really put on a very large trade unless you're going to do it in cash, which again, you can certainly do that, $220 stock, but it's really nice to kind of play with options. You just need the option market maker to, to hopefully make tighter markets in these names because it's tough. I've traded them and you know, sometimes if they don't work right, sometimes they become the Roach Motel. You get in, but you can't get out because the option prices are too wide. So don't let anybody fool you with telling you that these are easy to trade in options. They're not. So you have to kind of keep that in the back of your mind and your position size in these options. What else? In the tech, so let's get away from the tech space for a minute. Let's go to a couple names that I think and a couple areas that I want to concentrate on a little bit. Let me talk a little bit about what I think is very attractive here. So and I'll tell you how I kind of set up for the week and how I use the option activity, right? Which sometimes I don't get into, but I feel like going on a little bit longer in this weekend's video. So I really like this ETF, but there's no options, and the ETF is super. It doesn't trade a lot, but it's a good proxy for watching the group. So this is the Dynamic Leisure and Entertainment ETF, and I've brought this ETF up a couple weeks ago, and if you look at the components, because this is kind of what I like to do. I like to look at a group that I think the whole group has some momentum to it. And then I like to look at individual setups that are happening and then break it. And this way, when I see the option activity, I'm not sitting on my hands and saying, oh, do I want to get into this name? I want to be prepared and do my research ahead of time so that I can make a decision rather quickly. I don't want to be researching it when we see that option activity. So Win, clearly a name that we've seen all kinds of option activity. If you're in it, congratulations. I basically... I'm not embarrassed to admit it. I'll admit it. I was in a one lot. That's all I was in because I just didn't. Clearly there's a lot of headlines that have been going on with the, with Steve Wynn and so forth. So I wanted to participate, but I did it on a really small size. And hey, the one lot really worked out. So and again, that's fine. I'm participating, but I'm doing it at a level that I feel comfortable. With some of the option activity, because now it seems obvious, right? And again, people are tweeting about it like left and right, but it wasn't obvious a couple weeks ago. And I have, if you look at my Twitter feed, I've got Win. I mentioned how much option activity has been going on in the name, but it's really difficult seeing all the headlines, and you don't know that someone, clearly somebody thought it might be, now there's rumors out there saying that, or there's headlines about possibly the company could get sold to somebody else. So, now it seems obvious, hindsight 2020. So I did participate. I did it really small. But clearly that was a name that we saw a lot of option activity in. Las Vegas Sands. This is actually something that I like right here. Again, it moved up. It had a big day on Friday. So sometimes you feel, oh, geez, I missed out because it was up so much. Oh, sorry, on Thursday. So it kind of had an inside day on Friday. Notice it's not at the 52-week highs. It just had an MACD crossover. So see some option activity in this one, aggressive, that kind of gives you, that will possibly make a particular strike a little bit more liquid than the others. I think this is a really nice one. And clearly a lot of the casino names look pretty strong. I mean, it's IGT, SGMS, this has been a really nice group. Actually, the SGMS may be setting up for if we see some call activity. They had earnings that actually were not that great. So that's probably why I haven't looked at that one too much. But MGM is another one where we've seen a lot of call activity. A couple traders participated in this one in the trading room last week, and they had a really nice trade on their hands. I do not have anything on in this one. Again, I'm happy to tell you, either I'm in the position or I'm not. I'm not going to say that I called it. Um, just is what it is, right? I mean, I'm in this, and I hope you're in this to make money and to make money on my trades. I'm not in this to call trades. I'm in this to help, traders in the room, to profit and to decide where to take trades and what type of, uh, you know, if it's an option trade, where to select the strike, what they're kind of looking for, the risk that's in the trade. I'm not in this to kind of, talk about, I tweeted about this 2 weeks ago and I'm going to tweet it again saying I called it. That's that's bullshit. So I'm in this to put trades on, and I'm in this to profit. So big difference. So a few other groups that I'm watching as well. And again, I mentioned I like this leisure group, right? We saw, and again, part of it is kind of doing the research so that when you see the option activity. Now, this was a trade that I jumped on last week. This is Wyndham. Again, sticking with the WIN. This is a hotel name, and you could see I tweeted it out. And I mentioned that this is a group that saw a whole hell of a lot of option activity in 2017, but has been pretty quiet. Let's see if I can bring this up, just so you know I'm not pulling your leg. But really nice. I think the chart set up perfectly for this one, right? It had the bottom of value support. I mentioned that I did need to go ahead and, of course, not coming up. Oh, I know why I did that wrong. Right? I said the lodging names have cooled down a bit from the flow they saw in 2017. Nice big call bar, $1.6 million, and sitting right on the 100-day moving average. So I took this trade. Again, it was not a huge trade for me, but it really worked out pretty well. So huge day, up $4.5, and just firing off an MACD crossover. So another style that what I've been doing a lot with the option positions is I've been taking the profits and rolling them out and up, right? Just like an institution does. So that's something that I think is definitely, even if you didn't get into Wyndham, I mean, take a look at this thing. It's just kind of sitting back in the trend now, and you've got your first, MACD crossover for buy signal. So again, if we get, I would actually be welcoming a couple days of chop to kind of take a look at some of this flow, just like a Wyndham, and say, hey, this is a really great group that I want to be in. So names like, other names that I would be waiting for a little bit of option activity, look at Marriott. So if this happens to see option activity next week, I'm in. No hesitation. It's at 143. It's above the 50-day moving average. It's got an MACD crossover. A lot to like in that particular chart. Let's look at Hilton too. Hilton, maybe not ready yet. Maybe if you're looking for a little bit more confirmation, MACD crossover, it looks like it's not completely ready yet, but maybe a name to keep on your watch list. Another group that I haven't revisited since January is the cruisers. So you can look at CCL. This is a group that really, since they reported earnings, we haven't really seen much option activity, but it's not bad. It's right above the 200-day moving average. That's your confirmation. That's your stop. Again, maybe a little bit more confirmation you're waiting for is a move for the MACD crossover. NCLH, another name that I think is interesting. Again, I like these leisure names because we had a positive. I should have said this in the beginning why I went to this ETF in the first place, but the PEJ ETF. We had a great jobs report on Friday. We've also been seeing a lot of things like consumer sentiment, consumer confidence that are pretty strong. We're seeing just a lot of good, I think anyway, a lot of good economics that have been coming out that's showing that the consumer is pretty strong. So I think people are going on vacations. So it just fits. I think the theme and the setup on the charts are also kind of confirming one another. So NCLH, it's been a bit of chop. So again, I do the research beforehand so that when I see the option activity, I know where I want to be. Let's see RCL. Again, a kind of a choppy, I could tell right away, a little bit of a choppy looking chart. The airlines started to perk up last week. The one that we've been seeing the most option activity is in American Airlines. American Airlines is not back to the 52-week high, but you can see they're quietly just making a really, really nice move. Delta, I think, is also looking attractive, but it's really American Airlines. If you want to know where the option activity has been, I think I could even tell you from memory. I think it's the May 55s, and you can look at the open interest. They've been accumulating these. They haven't been. They haven't. It hasn't been one big lot, right? It's been. It's been a bunch of different trades that have got you to where it's been. And let me just bring up the option chain, which is taking a little bit of time here. But if you go to the May 55s, you can see 13,000, and there's also 13,000. Also the August, there's 25,000. You see there's a lot of open interest here. 13,000 on those May 55 strikes, which I was referring to. So I think this group, I think could go a little bit further too. Other trends that I'm noticing. Let me go to what saw just huge option activity. Sorry, not option activity. What saw a huge inflow. The materials space. This is the Vanguard Materials ETF. Look at the inflow that this thing saw last week. So what does this tell you, right? This was $339 million just one day that somebody really allocated into this. Also, the XLB ETF. Remember, there's a lot of times there's different ETFs in the same stocks, right? They do essentially the same thing, but maybe they're a little bit different. Maybe the management fee is different. I know the management fee is cheaper than XLB, so it could be why somebody went in cash. Maybe they're saving a little bit on the management fee. But $339 million. I believe that's the biggest one-day inflow ever for this ETF. So you look at how this thing is setting up. Technically, it just got above the 50-day moving average, so it really hasn't done much. Overhead supply probably up here at 63 bucks. So I think if it gets out of here, you've got a nice trade. That's XLB. This is VAW. Again, they're going to look exactly the same, but you could see that that volume on here, which I've confirmed is an inflow. And then you could start to drill in some individual names. So by far the biggest weight in here is Dow DuPont. So how do I use this, right? So how do I use these inflows that I'm seeing? Sometimes I use them as contrarian. Sometimes I look for them for ideas. This one I'm actually looking for an idea. So I view this as positive for this sector because a large fund likes the group. I don't know the reason, but they are pretty attractive. These levels must be pretty attractive for them to put the biggest inflow ever into the ETF. And then also kind of a second derivative of this is I want to start looking for option activity in the individual names. I want to go through the ETF and the components, and I want to see what are the best setups, just like I did in that PEJ ETF. So I think a long position can just be thrown on here in the whole ETF, but I think names like Dow DuPont, I put a couple levels in our newsletter about Dow DuPont. It's kind of sitting right in the middle of the value area. Maybe wait for a move outside of value in Dow DuPont, or maybe wait for a big call buying. Remember, we saw a lot of call buying in this name. I actually got in this name back here before there was option activity. And it was great. I mean, it's a beautiful thing when you're already in a trade to see the option activity. And we did that a couple months ago, and it worked out like beautifully for a good trade. I was lucky with this one. I got out of it, and then we had this big move down. And notice we're back to where we are. So my whole thesis on this was Dow DuPont was looking for that next leg higher, and notice we're almost back there. So I'm kind of looking for Dow DuPont, which is my favorite in the group, 73.15. So again, I've got a bunch of other names to check out. I'm not going to spend more of your time, but that's for me what it's all about is doing the homework and getting ready for some other areas. I'm not really looking to establish any new names in the semi space, unless I see something really attractive. Of those names, I mean, I do like Lam Research. I like Google, but I've already got enough tech positions on at this point. I'm kind of in the let your winners ride mode, and I'm in the names that are in investments for me. I'm holding those names. I'm not going to touch them unless they hit a stop. But I think Google looks interesting. Certainly, we've seen what happened in the call buying in Netflix and in Amazon. They've just been absolute beasts. But at this point, I am looking for, and again, the rotation, we started to see that last week in ETFs, even though nobody's talking about that. And again, that's why I'm very disgruntled when I see somebody talk about rotation into tech last week, which is not what happened. That rotation into tech happened weeks ago. They started to rotate into other sectors last week, such as that materials. Again, so going to my fund flows, and I'll kind of leave it here. But again, why I analyze this every week is to show where the institutional money is going into. So a lot of money went into materials, financials, consumer discretionary. So I already talked about gaming and leisure, but I think a bunch of names in this group, like I'm looking at Home Depot in the consumer discretionary space. Also, there was money added back into industrials. Still a lot of money being taken out. I didn't talk about the energy flow either, but I'm in a CVX trade. That's what I've kind of learned at this point. I got really bullish on some of the energy names, and I kind of got caught a little bit in some of those trades. When the big sell-off happened a month ago. So I'm not really looking to take huge positions in the energy names, but I want to participate a little bit. So I'm in CVX. I took a target in CVX. A couple other groups to keep an eye on. I really haven't, in these videos, I haven't been going over international equities, but a couple names that I like in the international space, which we've been seeing call activity in, is the Greek ETF, something a little bit different, down to the 200-day moving average, and somebody's been buying calls in the Greek ETF. And again, you could see what that's done here. Base, nice base. I was in this Greek ETF and I got out of it once the market started to sell off, but I'm kind of open to getting back into it. EPI, we didn't see any option activity in this one, but I think it's setting up. I took a trade in this late on Friday. India right on the 200-day moving average. I love this setup because I know where to get out of it, and it's very close. If it breaks this 200-day moving average, and again, I don't know if this is going to hold the 200-day moving average. It's just a trade, right? So if it breaks that 200-day moving average, you get out of it, and you got to be disciplined. But it looks like a pretty good setup here from where it was from 29.50 and holding in. EWZ, Brazil, we did see some call buying. I'm pretty overweight emerging markets, so at this point, I will tell you, I can't really take any more exposure into emerging markets. My allocation to this group is full, but I think this is a good group to watch. EWZ, which saw call buying, and this ETF has been actually seeing inflows. This is the Latin American ETF, where you get exposure to not only Brazil, but Chile, Peru, Mexico. By far, Brazil is the biggest weight in the ETF, but still you get some exposure to those other countries, and you can kind of see it looks a little bit like that EWZ chart because again you got a lot of overlap, but you have some exposure to some other areas. So I would watch 38.95. I think a nice looking cash setup, cash trade setup, not options because the options are too wide, but above 39. Final thing I'll talk about, which I feel like I keep skipping over, is sentiment. So where are we in sentiment? So let me just bring up a VIX chart. This was great action last week in the VIX, and again, this has been one of our staples of what we've been watching since the VIX, got volatility levels got much higher, but all the way down to 1464. We'll see if this thing stays subdued. If it stays below 17, 18, a great sign, right? So we'll see if that manages to continue. But clearly all the way from 30 down to 14, and if you turn on CNBC, sorry, I don't mean to be calling out CNBC, but they keep having people come on and they talk about how volatility is here to stay in 2018. Since those people have been saying it, the volatility has done nothing but drop. So we could have another bout of volatility, sure, and I think that's definitely not out of the realm of possibilities. But And if that happens, you just want to manage accordingly, right? Maybe take a little, dial down your risk if we start to get, in the upper teens in the VIX again. But it's just funny that when people start to say that one thing, the total opposite happens. So where are we in sentiment right now? That was another thing that was an observation. Again, hindsight being 2020 here, but we saw some negative things happen last week, and we were at the saturation point of negative news, right? When there's more negatives that come out and the market doesn't sell off anymore, that we've gotten to the point where the market is fully pricing in all the bad news. So that's where we got a week ago. We were at a 10 on the fear and greed index. Now we're a 44. So we're certainly not where we were a couple months ago. So the dial hasn't crossed the 50. So I don't think there's anything to worry about. Just the setup is not going to be as great as it was, last week when the dial was all the way to the left, and at that point we were at bad news saturation. So, be mindful of that. It's still we're nowhere near extreme good, and that's a good thing, in my opinion. What was the last thing that I wanted to talk about? I don't remember, so we'll end the video there. Thanks so much for watching the video. A little bit longer this weekend, but certainly a lot of things to go over. And listen, I don't tweet out everything that I see, because I'm doing that in our trading room every day. So I tweet a little bit more in the morning, because in the afternoon I do live sessions in the trading room, which also come included with my live audio throughout the market day, as well as the pre-market session that we do starting at 9 o'clock in the morning. All right, so that's it. Have a great rest of your weekend, and hopefully I'll see you in the trading room. Thanks for watching.